Hello and welcome to the AJ Bell Funds Report for the third quarter of 2021. My name's Tom and I'm here on behalf of the investment management team to talk through the highs and lows of the quarter and the events that moved the financial markets in recent months. The end of lockdown and subsequent economic recovery has been overshadowed by supply chain issues in the UK and an energy crisis across Europe. This saw oil reach a 36-month high at the end of the quarter at $80 a barrel. Our exposure in the higher risk funds, which holds the iShares S&P 500 Energy ETF, succeeded in capturing this price increase well. Despite climate change initiatives and strong regulatory headwinds, there are signs that consumers and businesses have gone back to their old habits, and the global reliance on oil shows little sign of abating in the short run. The quarter also saw mixed performance in stock markets, with developed nations, including the US, performing well and broadly in line with each other. Though it has lagged for a while, the Japanese stock market led the way here, gaining over 7% across the quarter. However, the main story in stock markets was the sell-off in Chinese shares, leading to a wider underperformance in emerging markets generally. This was led by a prolonged period of volatility in China, as well as the ongoing debt crisis in Chinese construction company Evergrande. With the company owing more than $300 billion, it sent shockwaves around global markets, leaving investors fearing a similar crisis to the 2008 crash that rocked the financial industry and world economy over a decade ago. India, another emerging market country, on the other hand, experienced very different fortunes. Its strong performance the reverse of China's over the quarter. Interest rates remained low despite the Consumer Price Index, one of the measures of inflation in the UK, heading towards 4%. As the price of goods rise, central banks can choose to take measures to slow it by raising interest rates. The Bank of England and other central banks, including the US Federal Reserve, have indicated they are prepared to do this, but haven't taken action yet. This is because the consensus view is that any inflation could be transitory. In other words, this might all be over quickly. As a result, bond prices stabilized this quarter, only experiencing minor losses. Thank you for watching the AJ Bell Funds quarterly update.